Have you ever looked at the financial markets and just thought, what is going on? Because right now, we're seeing a fascinating puzzle play out. On one side, you've got the explosive, futuristic world of artificial intelligence, with company values just soaring into the stratosphere. And on the other, you have gold, one of humanity's oldest, most tangible assets, quietly smashing all-time records. So what's the deal?
This headline from The Guardian really just captures the whole contradiction perfectly, doesn't it? You have one of the world's most powerful central banks sounding the alarm, warning about a potential AI bubble. And at the exact same time, investors are flocking to the safety of gold, pushing its price to a level we have never seen before. Now, believe me, these two things are not happening in a vacuum. They're connected. So let's figure out how.
All right, let's dive into the first part of this story, the absolutely incredible, almost dizzying boom in artificial intelligence.
Over the past year, the investor excitement around AI has just been completely off the charts. I mean, companies right at the heart of this revolution, we're talking chipmaker Nvidia, tech giants like Google and Microsoft, they've all seen their stock prices absolutely skyrocket. The market is making a massive bet that AI is going to fundamentally change, well, everything.
And to really get a sense of the scale of this optimism, just look at a company like OpenAI. Its valuation has ballooned to $500 billion. To put that into perspective for you, that is more than the entire economic output of countries like New Zealand or Portugal. This isn't just steady growth, folks. This is a rocket ship fueled by pure, unfiltered AI hype.
But here's where it gets really interesting. Right as the party is getting into full swing, the financial authorities, they're starting to step in. They kind of sound like concerned parents, warning that things might be getting just a little out of hand.
And that leads us to the absolute crucial question hanging over this entire boom. Is all of this excitement, is it actually justified by reality? Or are we just watching another classic speculative bubble inflate right before our eyes? And look, this isn't just some pundit on TV talking. This is a direct quote from the Bank of England's Financial Policy Committee. They are officially saying that valuations, especially in AI tech, look stretched. Now, when a central bank uses careful language like that, you can bet that people who manage big money, they sit up and listen.
So the bank pointed to some very specific risks, like what if the actual progress on AI capabilities turns out to be, well, disappointing? What about the real-world bottlenecks? Not having enough power or data centers to run all these systems? Or what if more and more competition just eats away at all the profits? Any one of these could lead to what they call a sharp correction, which, let's be honest, is just a very polite way of saying a market crash. And if you want a statistic that really drives home this gap between the hype and the reality, check this out. Recent research from MIT found that a staggering 95% of organizations are getting zero return from their investments in generative AI right now. That is a massive disconnect between the money pouring in and the actual value coming out.
Okay, so let's switch gears. Let's move to the other side of the market, where a completely different story is unfolding. While the AI world is buzzing about future potential and, potential risks, a much older asset is making some serious moves of its own. For the first time in history, the price of a single ounce of gold has surged past $4,000. Now, this isn't just another small move up on the chart. This is a huge psychological and financial milestone, and it has the entire market talking.
I mean, the momentum here has been just incredible. Take a look at this timeline. It was just 2 years ago that gold was trading below $2,000 an ounce. It has now doubled. This isn't some slow, steady climb. It's an explosive rally that has picked up some serious speed.
So why? Why is this happening? Well, it all comes down to gold's traditional role as what's known as a safe haven asset. For centuries, whenever investors get nervous, when there's turmoil or uncertainty in the world, they buy gold. It's seen as this reliable store of value when other riskier assets start to look a little shaky.
And let's face it, there are plenty of reasons for investors to be nervous right now. We've got global uncertainty all over the place. Central banks around the world are buying up gold reserves like crazy, and it's all happening against this backdrop of relentless economic volatility. Investors are looking for shelter, and right now, gold is their port in the storm.
Okay, so here's the crucial part. This is where we connect the dots. You have to understand that these two stories, the speculative frenzy in AI and the flight to safety in gold, they are not separate things. They are deeply, fundamentally connected. This chart lays it all out perfectly. AI stocks? They're a bet on future growth, driven by optimism and a massive fear of missing out. Gold?
That's a flight to a physical asset, and it's driven by uncertainty and fear. The more nervous investors get that the promise of tomorrow in the AI world might just be a bubble, the faster they run to the security of history that gold represents.
And that's really the bottom line here. They are two sides of the very same coin, and that coin is called market sentiment. One side of the market is reflecting hope, maybe even a little greed for the future. The other side is reflecting fear about the present. And the story these markets are telling us right now is that fear is gaining a lot of ground.
So, what does all of this mean for you? I mean, why should you care about the price of a microchip stock versus a bar of metal?
Because this whole dynamic is so much more than just numbers on a screen. You can think of it as a real-time barometer for global economic anxiety. By watching the relationship between these high-tech growth stocks and the ancient safety of gold, you get a really powerful signal about the world's collective confidence, or maybe the lack thereof, in our economic future.
So, I'll just leave you with this thought to chew on. The market is always a battlefield between two powerful forces: the fear of the unknown and the greed for what the future might hold. Looking at the AI boom and gold's record-shattering rally, which one of those forces do you think has the upper hand today?